Hello, I'm Jason Jessup, the CEO of Magna Mining. And Magna is a growing copper precious metal producer focused on the Sudbury Basin of Ontario. So there will be a lot of forward-looking statements throughout this presentation, so I do caution the listeners to do their own due diligence. So for those who are not familiar with Sudbury, Sudbury is a long life mining jurisdiction. It's a great mining camp with over 100 years of production history, dominated by major mining companies like Inco and Falconbridge, now Vale, Glencore, and Magna. And because of this, there's all the existing infrastructure in place that a mining company can utilize, including large processing plants owned by Vale and Glencore, as well as 2 nickel smelters. All of this creates an opportunity for a company like Magna to have very low cost restarts of existing mines, brownfield projects. And it's a very unique situation where we can mine the ore and sell it to the processing plants here and not have to bear the costs of having our own mills and tailings facilities. Again, with Sudbury being a long life mining camp, it has a great social license here to operate. The people of Sudbury really depend on mining. They welcome new mines to be brought back into production. They look for the jobs and the benefits. And this includes the local First Nations who have built many companies to support the mines here in Sudbury. But the reason why I love Sudbury so much, and the reason why I came here, is really because of the world-class mineral endowment. It is truly one of the remarkable places in the world where you can find extremely high-grade copper deposits with remarkable amounts of precious metals, and of course nickel as well. So our company, since inception in 2016, was really built on 3 pillars of growth, and those pillars are production. So in this case, leveraging our McCreedy West mine, which is in production, to generate cash flows that we can reinvest and bootstrap into restarting our other operations. The second pillar is exploration, and myself and much of our team were part of another company called FNX Mining here in Sudbury that actually owned the McCreedy West mine, the Levack mine, the Podolsky mine, and brought those back into production. We were very successful at that, and a big part of our growth at FNX was through making discoveries, especially high-grade copper discoveries in the Footwall. We believe there's still many more of these types of discoveries, and a lot of my former colleagues with FNX are now my colleagues here at Magna, and we believe we can make some more big discoveries here in Sudbury. And the third pillar is one that I think has been very impactful for our company over the past 4 or 5 years, and that's on making synergistic acquisitions of non-core assets owned by the majors here in Sudbury. We've made 2 significant acquisitions, one in 2022 with the acquisition of our Crean Hill property, and then recently in February 28th of 2025, we acquired 8 properties from KGHM International, the former FNX mining properties, with 3 past producing mines and 1 actually that is producing, and 2 past producing mines and 5 exploration properties. And these acquisitions have really catapulted our growth in our company, and we believe there's still opportunity to do other synergistic smart acquisitions here in Sudbury to continue to grow our company. So this map shows the Sudbury Basin, which was created by a meteorite impact about 1.85 billion years ago. The mines sit along the rim of this basin, and then the deposits follow that down dip of the historic crater. As you can see on this map, Magna has really grown our presence in Sudbury and our land position, having our producing McCreedy West mine and then 4 past producing mines that are permitted to go back into production. And we believe this is an unprecedented pipeline of growth that we also believe can be executed and with minimal amounts of capital, because we do not need to build mills and we do not need to carry that infrastructure. We can simply restart mines that have a lot of investment already made into them and then sell that ore to either Vale's Clarabelle Mill or Glencore's Strathcona Mill. From a resource perspective, we have significant metal in the ground. 3 of our properties have NI 43-101 resources. We have 3 other properties, our Levack, Podolsky, and Kirkwood, that have historic resources that will get updated later this year. But all in all, very good resources, a lot of metal in the ground, and we think this is going to grow once our historic resources get included as well. So our McCreedy West mine, this is our producing mine. We have owned it for about 6 months. It is a former Inco mine that operated from the early 1970s until the late 1990s. At that time, Inco shut it down. FNX Mining acquired it in 2002 as part of an acquisition of 5 properties from Inco. It was brought back into production in 2003 by FNX. And I was a part of this operation, managing the underground operations from about 2005 to 2008. And since reopening, it's produced about 7 million tons of ore that's been mined and shipped off to either Vale or Glencore's mills. But it's a very simple operation. It has a ramp from surface where ore can be hauled up to surface, dumped on their ore pad, gets crushed, sampled, loaded into highway trucks, and then trucked off to the mills. It's a very simple operation, shallow mine, and it can be run very efficiently. That being said, this was a very non-core asset to its previous owner. There was not enough capital invested in it, and we are making efforts to invest the capital necessary in 2025 to have a very strong 2026 and beyond. And those investments are going very well. A lot of that is in capital development and equipment, and we're quite pleased with how things are progressing. So this is an aerial view. This is the McCreedy West mine, the town of Levack, and the Levack mine next door to it. These mines are connected underground with a drift. Right next door to the McCreedy West mine, in this area right here, is Glencore's Hardy mine. Then further along is the historic Onaping mine, and then Glencore's Craig mine. There's a lot of opportunity, we believe, for potential synergistic acquisitions with neighboring properties to potentially mine resources that were left, much like we've done at McCreedy West after Inco shut it down. And these are the types of opportunities that we are in regular discussions on. So currently there is a 9.3 million ton NI 43-101 resource in the indicated category. And this is composed of 3 separate deposits at the McCreedy West mine. In red is the Intermain contact nickel zone. And then below that in the footwall, there's the PM, Footwall PGE copper zone, which was a discovery made by FNX Mining. And then above that is the 700 Footwall copper PGM zone. And that is our focus of mining at this current time. And I see foreseeable in the future at these metal prices will continue to be our focus. So in Sudbury, as I mentioned, this basin was formed by a meteorite impact. And the edge of that historic crater runs something like this, where you have the nickel zones sitting on top. And then in the footwall down below that, in a rock unit called the Sudbury Breccia, is where you find these footwall zones that are typically more copper rich with precious metals. Now those grades can vary and those ratios can vary, but typically much more rich in copper and PGMs. And again, this was a big focus with FNX Mining, looking at Sudbury again, and continues to be a big focus for Magna Mining. So looking just at the 700 footwall zone, which is where we're mining now, and we will be mining the rest of this year, it is a significant part of that 9.3 million ton resource at about 5.2 million tons at just under 2% copper, 0.7 nickel, and a little over 2.5 grams of platinum, palladium, gold combined. Within that, there's some very high grade copper where you have massive chalcopyrite veins wrapping around blocks of this breccia. So you have a matrix with large class of essentially waste rock, wall rock that's broken up in amongst this, and then you have high-grade copper. So understanding those trends of mineralization, understanding where the massive sulfides are in relation to the class is really important for grade. And when you get that right, you can produce some very good grades. So as I mentioned, the McCreedy West mine was very much a non-core asset previously with the previous owner. For us, This is a flagship asset, so we are doing what's necessary to invest the capital to put the development in place to make sure we have a flexible mine plan with enough development ahead of us that we can properly plan, develop stopes, have an inventory. And that's really the key to having efficient, successful, sustainable operations. And these green lines here are the proposed development for the rest of this year and the first half of next year. And one of the things that is a big focus is to drill and develop more out on this western side. Again, Glencore's historic Hardy mine, it sits on the other side. And there's a large area out here, which we think has great potential for more exploration towards the Hardy mine deposit, as well as in the footwall behind the previous mining. So great exploration potential, and we'll be drilling that this fall. And that'll be some of the first drilling on this western side since Inco operated the mine in the 1990s. Now, we've put out a number of drill hole intersections since taking over this mine, primarily to highlight to investors in the capital market community the types of grades you can see here. And again, as we continue to understand where this higher grade trends are, we will redesign our stopes and really focus on quality of ore as opposed to just mining as many tons as we can. And there's a huge benefit economically to doing that. We've also released some holes fairly recently that we're quite impressed by. And these are in an area that is in the footwall, in an area which hasn't seen very much drilling. So right back in the back of the 700 complex, we intersected a couple narrow intersections where the copper grades are quite good, very sort of normal copper grades that we've seen in many other areas, but extremely high precious metal grades, where we're seeing, close to an ounce over 1.8 meters, 42 grams over 1 foot, combined with some decent copper and nickel grades. And we believe that this area is a vein system that runs in behind the 700 and has potential to continue towards surface. So we're going to be getting a drill in shallow underground to start drill testing this and see if we can't follow this up. Now, again, these are small intersections, but when you combine it with our bulk mining that we're doing right now, if we can add in even 200 tons a day of perhaps double the grade diluted of what we're currently mining, it can add a lot of copper equivalent pounds next year and really have a material impact. Again, we need to do the drilling. We need to see if we can put this into a mine plan. But this is just some of the upside that we're seeing at McCreedy West potentially for 2026 and beyond. So now I'm going to move on to our Levack mine. And Levack is a fantastic mine that has a great history of production, operated for approximately 100 years by Inco and FNX. Went on care and maintenance in 2019, produced over 65 million tons of ore throughout the history of this operation. Currently, it has an active shaft, crew of about 12 people that keep things in good order, and it is much of a turnkey operation as you can get. And it has been the focus of our exploration drilling since taking over this property 6 months ago. So the Levack mine is connected to the McCreedy West mine at the 1600 level, and much like McCreedy West, it has both the contact nickel copper zones, and then in the footwall, the high-grade copper PGM zones, most notably the Morrison deposit. And you can see that how you have this contact mineralization, and then underneath it in the footwall, you can get these concentrations of very high-grade copper. Now, there is a historic resource here, and I'm not going to get into it because we will be putting out a new resource, but definitely potential for a sizable resource once that's completed. Now, again, this is a historic resource on the Morrison deposit. It was a deposit discovered by FNX in 2005, and it was the first footwall deposit discovered at the Levack mine. It was subsequently put into commercial production in 2010, operated until 2019. and we believe still has a lot more potential to grow and expand. And there's a number of veins that were not mined that we will consider putting into a mine plan going forward. But what has really caught our attention and where we've been putting effort into is looking at a restart plan that would incorporate a new ramp from surface to come down and start to exploit another footwall zone we call the keel zone, which is very close to surface. Starts at less than 200 meters below surface, continues on to about 400 or 500 meters below surface, definitely open for expansion. And this deposit is much like the Morrison deposit, where you can get massive chalcopyrite veins that are relatively narrow, 1 to 2 meters, but within that 1 to 2 meters can grade 24, 25% copper plus some PGMs and nickel. And again, we have released a number of results sort of to that effect. So this is an area that we think is, very possible for a 2026 decision to start constructing and developing a restart plan here. And we would expect this ramp to continue into an area over on the eastern side of the property, which is would access the number 1, number 2 ore bodies, very close to surface. And this is an area where we released some drill results in August that intersected some wide nickel copper mineralization to the effect of 28 meters at 2.3 nickel plus copper, and another intersection in the same hole of 12 meters at 3.3 nickel plus copper. And this is an area that could likely be applicable for bulk mining methods, where you could mine very low cost and potentially some fairly good numbers and good grades. So this ramp is currently in design phase, and we're evaluating it as a restart option and understanding the costs and the economics around that. Now, we are also looking at having some work done by one of our neighbors to finish some development that would provide access for the neighboring mine to use our mine as a secondary egress. This will open up some interesting ground for exploration drilling on our 3600 level, which previously we have not had access to. The shaft at Levack mine was rehabbed down to about 2,900 feet, and the 2650 station is our lowest active station. We never did get down with FNX or KGHM to 36 station. So this would be the first time when this work is done later this year that we'd have access to actually come out here and do some drilling into the footwall in this area off of 36, which is pretty exciting to us. Now, I talked a little bit about the Sudbury breccias at the McCreedy West and how they host these high-grade copper PGM footwall deposits. Now, at Levack mine, we also have Sudbury breccias, and in dark blue is the Magna property boundary that's clipped to the interpreted Sudbury breccia units. And then to the east of us is that same breccia unit for Vale's Coleman mine. And it's what hosts the Vale's 153 ore body, which is a high-grade copper PGM footwall deposit that Vale's been mining for over 30 years. So I'll spin this around and you kind of look down these breccia units. You can see that they're subparallel to, this is the breccia unit here, and that's the SIC contact where these copper and nickel deposits typically sit, which have been the bulk of the mining at Levack mine. So when we took over this property, we did believe that there was potential for new footwall discoveries. And there was a lot of the footwall, these breccia contact, that has not been well explored. So we started to try and understand what exactly is controlling why the Morrison deposit is located exactly where it is and not somewhere else. So there's a few things we recognize. One is, well, you need to be in a breccia unit. And these breccia units, we're showing it as a flat plane, but they can actually be hundreds of meters thick. So we said, okay, we got to have a breccia unit, but why is this in this place in the breccia unit and not somewhere else? What causes these concentrations? What we noticed is there seems to be these bounding structures that come down, are fairly north-south oriented, and seem to bound the bulk of the mineralization in that Morrison deposit. And these continue on for a long distance. So that seemed to be, in some way a control. So we need between these bounding structures and Sudbury breccia. And those are two things that seem to have some control over the Morrison deposit. And the third one is needs to be below a significant nickel copper deposit. So looking at those three factors, we started to examine the property. And what we found was if you were to take those bounding structures and follow them back to the north, they would end up taking us right back to the number 1, number 2, and number 3 ore bodies. So there we have the breccia unit, we have another big contact deposit, and we have these structures intersecting the breccias. It seemed like a great environment. And that's really why we decided to drill a hole from surface last May. So in black here, you can see this hole that was drilled down. That was our 14A hole, and we announced that back in early July, the results from that hole. So it was a deep hole, intersected 60 centimeters, approximately 2 feet of 2.6 copper, 8% nickel, and 18 grams of precious metals. So not a huge intersection, but Dave King, our Vice President of Exploration, and myself, who knew lots about the Morrison deposit, were very excited. So the upper part of the Morrison is called the Rob Zone. And the Rob Zone was a narrow vein, nickel-rich zone that sat right on top of the more copper-rich Morrison deposit. So when we looked at this core, we said, wow, that looks like Rob Zone ore. So we were pretty excited and thought, maybe we're on top of something here. We did some geophysics. It told us there was a conductor off hole. So we deepened a hole back in June, deepened this hole and hit nothing. But it was a great geophysical platform. So we did borehole EM. It told us go further to the north. So we wedged off of that hole. And last week, we announced hole FNX 6083-1 W1, that wedge hole, which intersected two massive sulfide veins. One was 29.2% copper, 0.9% nickel, and 53 grams of platinum plus palladium plus gold over 1 meter. And then a second vein 75 meters down the hole of 25% copper, 1.8% nickel, and 26 grams of platinum, palladium plus gold over that half a meter. So these were, very exciting holes for us. Obviously, we recognized visually that we had massive chalcopyrite. It was within a large breccia unit that had many anomalous narrow veins and veinlets of chalcopyrite and precious metals besides these two. So we were quite excited, and more so that it was really supporting our thesis that we could find another Morrison-like footwall deposit at the Levack mine. Again, the very top of this system would have been 1 to 2 foot veins of 5 to 8% nickel with some copper and a little bit of precious metals. And then by going another 150 to 200 meters below, that's where we'd really start to see massive chalcopyrite. So when we tested 140 meters below our 14A hole, we actually were, extremely surprised to see a very similar result with massive chalcopyrite. The amount of precious metals that were assayed and we received in this hole were far beyond our expectations. Again, comparing to the Morrison deposit, we would not see high precious metals, and they would typically be 20 to 30 grams of platinum, palladium, gold combined until we got much deeper, down around the 4,000 foot level. We're still only up at 2,800 feet below surface, so very, very high up in the system for Levack mine in the footwall. So very exciting holes. Now we are currently in the process of doing another wedge hole to test further to the north on this same horizon. And then the next hole after that, we'll be looking to go deeper and do a deeper step out, perhaps 75 or 100 meters down dip of this to see if it does get thicker and has some continuity. So these green lines represent potential holes that we can drill from underground. And over the next 6 to 8 weeks, we'll be bringing multiple underground drill rigs into the mine to continue to follow up on these 2 holes we're calling our R2 or our Robs 2 target. We're quite keen on, as quickly as reasonably possible, figuring out sort of dimensions of how big this potential zone could be. So far, we expect to have the first drill underground about 10 days, a second drill by the end of the month, and hopefully have sort of first drill results out from our underground drilling sometime in October, as well as hopefully some of these wedges that we'll be doing from surface. So we will have a fairly steady news flow over the next couple months. And I think the next couple months are going to be very important to determine, is this truly a discovery or is it a smaller zone that maybe we wouldn't quite call a deposit yet. But the next 3 or 4 holes will be very telling, and we're quite keen on it. One of the things that is fantastic for where this target area is located is that there's a lot of existing accessible infrastructure. So the ramp that was developed down into the Morrison deposit is still used as secondary egress by the neighboring Glencore mine. So we can bring drills down here and get set up and be able to drill horizontal or up holes, down holes, wherever we want from underground, and do that from multiple locations, which gives us a great advantage in following this to depth if it has depth extent. We did not have that option when we were doing the Morrison deposit. The holes were all coming from surface or they were coming from other levels on poor angles. This is going to give us a great platform. And then if we are successful in delineating a deposit, then to be able to access and to just drive a development drift out, either to set up a platform to do very detailed drilling or to actually access a vein system and do some mining on it, can be done very quickly and easily. One of the other great things is, again, having access to this 3600 level. We would hope to set a drill up there in October that we can drill not only testing our R2 target in this area, but also on the other side of this large Vicuñas fault. And this is an area where we think there could be potential for another system related to this number 4 ore body, which is actually a valley deposit. Our property boundaries right here. But this area right here has only had ever 2 drill holes testing it, drilled by the previous owner prior to them deciding to sell it. And of those 2 holes, one hit nothing, and one hit 33.4% copper, 0.9% nickel, and almost 24 grams of platinum, palladium, gold, which is not an insignificant grade. It was only over 20 centimeters, but that tells us that there is a system here. There is active Sudbury breccia that has the potential for more mineralization. So our plan will be to follow up on that hole, and we think we can do a lot of that right off this 3600 level, which gives a fantastic platform to do that. So if that's not enough exploration potential, stepping back and looking at, between McCreedy West and our Levack mine, there is a breccia corridor that is virtually untested, with a few holes that were drilled off this access track drift that have hit some very nice copper nickel mineralization. But this is something that we'll be looking at maybe in 2026 as part of that exploration program. So that's I think a lot of reasons why people are excited about Magna mining right now. We're very much moving forward with getting McCreedy West to a position where it can be a long life, sustainable, cash flowing mine, and we're happy with the progress we're making there. Exploration results have been positive, and we expect a lot of news between now and the end of the year. We've had great dialogue with both the provincial and federal governments in Canada here who are very supportive of critical mineral mining, and I've never actually heard so much government support or so much talk from the government about support for mining in my career. And then again, these are the things that you can't always put a timeline to, but we're still very active on looking at other synergistic accretive acquisitions of non-core assets in the Sudbury Basin that could have, great, I'd say, opportunities for our existing infrastructure to access more deposits, more mineralization. So those things are hard to put timing on, but I think our the people listening shouldn't be surprised if we announce another deal in the next 12 months. Now, this is a little bit outdated, but what I can tell you is we finished Q2. We announced that last week, our financial results from Q2. We finished the quarter with 27 million. We had progressive improvements in both development and in the amount of copper equivalent pounds mined in April and May and June. And again, I think we are in a strong position to have a very successful setup for 2026. So with that, I'm going to leave it up for some questions.
Fantastic. Great presentation, Jason. So first of all, could you tell us a little bit more about yourself before we begin the other questions?
Yeah, I live in Sudbury. So I live very close to where our head office is and our mining operations, as most of our team does. I've been in the mining industry since 1996. Spent the bulk of my career here in Sudbury, originally with Inco, then FNX, and now with Magna Mining. But I have done some international work. I'm really a mining operations guy who turned to the corporate side, and I do really enjoy leading our team here and being able to talk to investors and guide the vision of what we want to accomplish at Magna. But if people ask me, I always say I'm a mining guy.
Yeah, you're truly an operations guy, and that's our mining. But so maybe you could just, in your own words, summarize this year for Magna so far.
Yeah, well, it's been a whirlwind of a year. So we started the year off working very diligently to get our acquisition of these 8 properties from KGHM completed. That was a task in itself. Tied into that, we did a $33 million financing, closed the acquisition February 28, and then immediately started making the necessary changes to McCreedy West mine and exploring the Levack mine. So very busy Q2. And of course, with the drilling we've done at Levack now, the last few weeks have been very exciting as well, where we think this R2 target has a lot of similarities to the super copper rich Morrison deposit and some of the other North Range Sudbury Footwall deposits. Now, looking out towards the rest of this year, again, forward looking, we really do hope to have continued exploration at Levack mine, continued exploration and drilling results from the McCreedy West mine. Steadily improving both our development productivity as well as our grade control and quality of ore that we're producing at McCreedy West. And again, setting ourselves up for that long-term growth profile. Because in 2026, our goal would be in a position where we can restart the construction for the restart of the Levack mine, and then be prepared for the third mine, which we believe right now to be Crean Hill. So in the background, we're doing a lot of work on Crean Hill, on our permanent dewatering systems, on our engineering to bring grid power in. So when the timing is right and the capital is available, either from internal cash flows or other sources, we're able to move Crean Hill ahead as well.
How have you beefed up the team this year?
Yeah, so we've gone from in February having about 25 employees to about 190 employees today. And a lot of that was with the acquisition, because we did bring on a lot of the former KGHM employees who were at McCreedy West, but we've done quite a bit of hiring. We've brought in a chief legal counsel. We've beefed up our management team at the mine. Made some changes there and hired additional miners as well. So we are in a hiring mode and in a growth mode, and I don't see that stopping for the next few years.
Perfect. Well, speaking of which, so your G&A in Q2 was 2.2 million. How do you expect that to change going forward?
Yeah, well, there's a few things. So G&A is always one of those things that we're very cognizant of and managing it. And having a head operations in Sudbury has a huge advantage in itself and keeping our G&A costs down, because of course, renting office space and, having, other costs that in Sudbury that are much lower than we would in a big city like Toronto. But, right now, having one operation, when we look at our all sustaining costs, those corporate G&A costs, and those shared services, which are the manager of engineering, the manager of HR, the manager of health and safety, those costs all get applied now to our production at McCreedy West. As we grow the company and restart our second mine and our third mine, those costs now start getting distributed to those other operations, which will have a very material cost on our all sustaining costs, and we believe a material improvement. But overall, I don't expect our corporate costs to grow. And if anything, we're going to always be looking for opportunities to kind of rein those in and find efficiencies.
So then what key optimization areas have you found in McCreedy West, and how is it going?
Yeah, so I joke sometimes that, there's so many areas we can optimize. And I think part of our culture at Magna is, that operational excellence, that continuous improvement all the time. But, some of the areas we're really focusing on is getting our crews, giving them the information, our mining crews and our supervisors underground, giving the information of what is our goal. So give them a very clear directive and what is our goal for this week, this month, and even this shift. So they can go out, and if it's to get 27 truckloads of waste moved from these remucks to, backfilling stopes, then that's what it is. And we want to get 27 trucks. That's what we need to get. And if it's getting, 14 feet or 28 feet of development, then that's what it is. So coming up with very definitive plans and giving that direction, having that communication, because the workforce, really they're your best allies when it comes to executing a plan. They're the ones doing the work. So giving them that information. So that's been really helping with our development. And we saw that, from going from about 14 feet per day in April to 16 feet of development a day in May to 17 feet in June. And we've been progressively getting better. So focusing on development, big improvement. And what that does is gives us flexibility of our mine plan. That's a big one. Rationalizing our equipment. So there's a very large fleet of equipment that we bought with this acquisition from KGHM. Some of that equipment was old and redundant. Just getting it off of the books. So we've sold some equipment, some of it even for scrap, equipment that wasn't running. But if it's underground, you still need to do, monthly fire inspection services, and there's work just to keep it underground on the books. So getting rid of some of that allows us to focus on utilization of the equipment that we need. So that has actually, opened up a lot of time for our mechanics to do the proper preventive maintenance on the equipment to get better utilization. So that's been working very well. We've also purchased 2 scoop trams for underground, which again, allowed us to get rid of 3 older pieces of equipment that had a lot of wear and tear and, frankly, pretty low reliability. So those are some of the major areas, and there's lots of little things that we're doing all the time to just keep focusing. And I see tremendous opportunity for, efficiency improvements, and all that's going to lead to, better operations, more efficient production, which is going to result in lower cost copper pounds. And, I really I'm happy with the way things are going.
Let's start with, if you look at your guidance, the throughput will roughly be the same. You're almost at 1,000 tons per day, and you are, but the grade is increasing in Q4 up to around 4 percentages of copper equivalent, or a little bit above. What do you attribute that grade increase compared to Q3, and is that sort of the run rate? If we exclude the, I don't know exactly what the zone is called, but where you drilled 119 and 133. I don't know if that zone has a name yet.
No, we haven't named it yet. We kind of call it the 500, 510 level. Footwall of the Footwall. We need a better name than that.
510 footwall level Footwall. If we exclude any development there, what do you think the run rate grade-wise will be going forward?
Yeah, again, these are things that we'll, be able to give more color on once we have announced sort of our guide to 2026 and beyond. But bottom line is, there is a really valid trade-off to be done between mining selectively and higher grades for more tons at maybe a lower mining cost by using more bulk mining. And I think there's going to be a balance in between some selective mining in certain areas to try and come up with, very good grades, and then being able to go into some other areas that still have maybe wider zones of mineralization that we can take bulk mining. But ultimately, we're really pushing hard from my level all the way down to the mine to focus on quality. We do not have a large mill that we need to keep full. What we do is we sell ore to one of the existing mills. So if we're selling ore to Vale, there is a fixed cost per every ton we send them, whether there's 1 pound of copper in it or 10,000 pounds of copper, in a truck. Really, we're paying per ton the same price. So it's important for us to, focus on quality, which is going to lower our costs per pound of copper equivalent. And, if it means that we continue to mine 900 or 1,000 tons a day, but at higher grades, ultimately that results in much better economics. So again, we're not trying to say, the secret sauce to become more economic at McCreedy West is to mine 1,500 tons a day. It really depends on what is the grade of those tons. So ideally, I'd love to see us focus on grade, get the grades up to at least somewhere where we are in our Q4 guidance, but at sort of 900 to 1,000 tons a day, and then add in incrementally some selective mining at 100, 200, 300, 400 tons a day, but even at better grades. And having that balance and sort of multiple mining methods in many different parts of the mine, that's what FNX did, and we did really well. And that really, worked well for the McCreedy West mine and for FNX when we were running it that way. So we want to get back to that sort of more flexible multiple mining methodology. And again, just focus on grade. And I think we've shown where if we focus on grade and grade improves, you don't necessarily need more tons to make more revenue.
If you mine more selectively and more, especially if we're talking narrow, very high grade tonnage, like just a few, 1-2 meters of ore, are you still using stopes or another mining method?
Yeah, there's a number of different mining methods, but we could go and say, for example, in an area that has 1 meter wide veins that are some pretty decent continuity, we can go and mine those at 3 meters wide, and you're going to add in a lot of dilution. But if you're starting off with something that, let's say, is $1,500 NSR rock at 1 meter wide, then maybe at 3 meters wide, it's $500 NSR rock. You cut a few levels that are closer together, and you do some selective long hole, and you remote muck with smaller scoops. So you can still use similar mining methods, but just on a smaller scale where you're really focusing on it. And that works well if you have straight or fairly straight continuous veins. Now, in parts of the 700 complex, especially where we're long hole mining right now, often those veins will change direction and dip quite, abruptly. And so that might not necessarily work. But in our footwall of the footwall, for example, from what we understand about that part of the 700 complex, there seems to be fairly good continuity and consistent dip angles of these veins in that part. So that's an area where that might work. But again, I'll leave it up to the people at the mine who are now the experts in the company on how best to mine those areas.
Could you also talk about what is roughly now, how does the metal split for your copper equivalent production look like in terms of value?
Yeah, and it will vary, right? Especially based on the price of precious metals. But, generally 60 to 70% of our revenue will come from copper, generally. And then, it could vary, that other 30 to 40%, typically largely weighted towards the platinum, palladium, gold, and then some nickel and cobalt. But generally, copper is going to be the major revenue driver.
And could you also talk about capital allocation? How do you think that will change in terms of capex spend at McCreedy West?
Yeah, so there's not a lot of capital spend, and you can see in our financials in Q2, a very modest amount of capital spend. It is a low capital intensity mine. So this year we'll spend somewhere in the ballpark of $10 million on capital, with a couple new pieces of equipment and the capital development we'll be doing, and a few other upgrades and changes. But I would expect that next year it'll be less than that, just because if we are successful, and that's our plan, to get sort of 4 to 6 months ahead on development by the end of the year, at that point, then we should be able to sustain our production rate with our own crews without having any mining contractors there. And that's going to save us somewhere in the range of $500,000 to $700,000 a month. So those costs should go away next year. So I think that we'll have somewhere next year again, and again, forward looking, and this is not guidance, but maybe $5 to $10 million in capital again. We haven't quite determined, and we haven't completed our budgeting process yet.
But all in all, you can lower the capex quite substantially, and even by 5 million, and still maintain the same kind of throughput without getting behind on development.
Like, honestly, for any mine I've ever been a part of and seen, you can't lower your capital costs too much more than what we're sort of saying. 5 to 10 million is very little capital for any mining operation. And one thing that, again, past owners did not invest much capital. If we see an opportunity to invest more capital, increase production, and and come up with a plan that has better economics, then we'll definitely do it, because we are a growth company. We are not a status quo company. We're not about keeping a mine just sort of low productivity and just keep it running for the sake of keeping it running. We want to see it grow. We want to mine fast. We want to mine more. And if it takes a bit more capital, we'll do that. But again, we haven't put together our budget and approved it for next year. So these are some of the discussions we'll have over the next couple of months.
I mean, obviously, reducing capital is one lever. Another lever is just, as you told, try to increase the grade as much as possible, increase the value of ton in order to get that all-in sustaining cost. I mean, you want to ultimately get comfortably below $4 a pound of copper equivalent.
Oh, absolutely. And, I have, no doubt in my mind that that's where we're going. The McCreedy West mine is a great mine, and I think we've shown from some of the drilling we've done the kind of grades we can produce. Again, we're really in a development stage this year of the company, and we're developing towards areas where, some of these really highlighted holes that we've released in the last 6 months from McCreedy West, where we'll be stoping in those areas. So it's about putting in the development, doing the work right now, and I have no doubt we're going to have much lower all sustaining costs next year. Again, not guidance, not it's forward looking, but that is fully my belief and my confidence.
Let's talk about your Intermain nickel zone. Just touch base on that for a little bit. So what nickel price would like to see in order to go back there? And also, I mean, what work do you need to do? Do you have any expectation on capex and how fast it can go to get back if nickel prices would rise?
Yeah, I don't have a firm price, and we have really focused on our 700 copper zone. But, ballpark, I think when nickel would be at, anywhere around $8 for, more than a week or two, we would start looking at the Intermain nickel zone again. We did mine some tons out of there in Q2 that was leftover development that had been done by the previous operator. So, it is sort of ready to go. It wouldn't take a lot of work to go back in there. We probably could be shipping ore if we made the decision to go back into the Intermain. Within 8 to 12 weeks, we'd be shipping ore from there again. But we definitely want to see better prices, and we'd always compare that opportunity cost to focusing more on copper. So it would have to have decent margin.
Okay, but in other words, if nickel prices rise and actually stay there, you can quite quickly actually come back there.
Absolutely, it gives us a lot of optionality. And in my career, there's been multiple times where we've seen real quick run-ups in the price of nickel, and that's one of the challenges, because when the price of nickel runs, some of these big projects, people will start looking at them again. Large mining companies want to start development capital projects to bring new things online. Those often take years, and by the time they get them half built, you're seeing nickel going in the opposite direction again. We can quickly take advantage of any run up in the price of nickel. And if it only lasts for 12 months, then so be it. We mine for 12 months, and then if we decide to turn it off again, we can. We have that kind of flexibility.
Perfect. And you are developing toward Glencore's Hardy mine. What could you tell us about that? Is it still in production?
Well, I can tell you that we are developing onto the west side of the property, and we'll be doing drilling on our side of the property. As far as discussions with Glencore or in that Hardy mine, I can't say too much. But it was a past producing mine that shut down around 1969. I couldn't even tell you offhand how many tons were mined there, but it mined for somewhere in the range of 15 to 20 years. So it was a pretty significant deposit. The mineralization came close to surface. And I can tell you that there was no footwall exploration during that period of time. In Sudbury, footwall deposits, copper, PGM type deposits were not looked at. They were not explored for. So, we're going to explore, close to that boundary, throughout the rest of this year and into next year. And, we'll be excited when we can have some results to talk about there. But right now, it's blue sky upside.
Some kind of a cooperation might be able to get done here in the future.
Absolutely.
Essentially, I mean, you summarized your exploration efforts quite well, I think. But if you just could give us a high-level overview of how your understanding of McCreedy West and Levack has changed, what you have learned so far this year.
Yeah, we've had a great understanding prior to this with our tenure. Myself and many of our team with our tenure with FNX Mining. But I think it's getting reacquainted with McCreedy West and what's really happened there. From a drilling perspective, from a mining perspective over the last 10, 11 years since I've been, not involved with those mines. And, at Levack mine, I think that's more of a learning experience where we've really taken a deep dive and gone back to basics, looking at the old Mylar prints from the days when Inco was mining at the mine and doing hand-drawn, mapping and very detailed geology on some of these historic levels, and then doing a good interpretation of what that means. And this is some of the work that's led us towards, finding this R2 target and the drill results we put out last week. So there's still lots of learning to be done. Gord Morrison, who the Morrison deposit is named after, still one of our advisors, and he was in the office the other day, and he told me that we're sort of in Sudbury, we're on this fourth iteration of exploration, where for a long time it was all about contact nickel, and it was about footwall deposits. Then it was about recognizing footwall deposits were in places where the contact mineralization was depleted of copper. So you'd look, where did that copper go? And that was sort of the understanding in the 80s and 90s when they looked for these footwall deposits. It sort of progressed from there, where then it was looking at, okay, it's all about Sudbury breccias. And it was about, using geophysics to find these deposits in Sudbury breccias. But now the understanding is more around, why are the precious metals in these footwalls where they are? And how are the structures in the footwall actually controlling where this mineralization will be? So the structural geology is becoming a big part. So we're learning a lot from an exploration point of view at Levack. And I think that's going to really open up opportunities elsewhere on our properties.
Perfect. So could you summarize, where are your rigs currently?
I can do that for sure. So 2 rigs currently at the McCreedy West mine. We have 1 rig turning at Levack. We had just sent one out, and there's another one coming back in next week. So we'll have 2 rigs very shortly at Levack, 2 at McCreedy. We'll be getting 1 underground towards the end of next week. So we'll have 3 at Levack probably by the end of next week or the week after. And then, hopefully a 4th rig, which will be a second underground rig at Levack somewhere towards the end of the month, start of October.
And how many of these 4 rigs will be targeting the R2 zone? Have you already finished these 3-4 follow-up holes, or where are you with that?
So all of the rigs will be targeting the R2 zone. We have no more interesting target right now than that. So delineating if it has some depth extent, some continuity, getting some more pierce points into this system so we can actually start to have some confidence in the orientation of it is going to be key to us over the next 6 to 8 weeks. I think that, as it's all we talk about from an exploration point right now is R2.
Is this a breccia or is it just massive sulfide veins in or how is the deposits?
Yeah, it's again early days, but our interpretation is it is massive sulfide veins that contained within a Sudbury breccia in that matrix of the Sudbury breccia. There seems to be a lot of structural control that's probably influenced largely by the Facunas Fault, which is to the east of where our R2 target is. So it looks like that fault system, which is a massive major fault, you can trace that fault all the way up to Timmins and right across underneath the sedimentary rocks in the Sudbury Basin to the South Range to the Crean line. So this is probably a fault that was pre-existing the impact 1.85 billion years ago. It has a lot of control over the mineralization, where it is and how it got deposited in the North Range of the Sudbury Basin. And it looks like this mineralization that we're tagging into could be subparallel structures to that fault in the Sudbury breccia. Again, early days for interpretation, but definitely, breccia hosted, structurally controlled, massive chalcopyrite.
And the thought or the thesis is that it, like the Morrison deposit, it will blow out as you go deeper.
That is our hope. Again, we are extremely optimistic on it. Everything seems to line up like it makes sense. And, as we kind of proceeded with drilling the first hole and hitting our nickel-rich intersection, and then this hole, everything is kind of falling in line that it does look good. But yeah, if it does resemble the Morrison deposit, we would see thicker intersections in the next 2 to 3 holes. It very well may not. It may be a different style where it may have a lot more strike length, but not have those big blowouts. It might have more blowouts and less depth extent. These are all the things we'll figure out in the coming months.
So then, when do you think will be the next time you have assays from the R2 zone?
Good question. So we're drilling a wedge hole right now that should be completed within 10 days or so. So call it before the middle of September. And, we'll see when those assays get back. We have to obviously log it, sample it, ship it. But, the first half of October, I would expect for sure we'll have more results. And then I think it'll be fairly regular. More than likely, there will be single hole news releases for the next little while, because I think it's so important, and each hole is material because there'll be step outs and step downs. So people will be waiting to hear how those are going. So as we get results, we'll probably be releasing one hole at a time for the next little while.
You probably, anyways, in a restart scenario, hopefully next year, we'll start with the keel zone. But if this actually is a discovery, essentially, how fast can you get down? Can you actually get to mine it?
Yeah, it's great infrastructure, so we can get moving fairly quickly. Obviously, we're not going to be mining until we have a deposit and a resource. So that's going to take some drilling, and depending on the size of it and drill density and consistency, we'll make that decision. But once we make the decision, to get where this wedge one intersection was reported, it would be somewhere around 600 meters of development horizontally. So not a tremendous amount of work. That's something that could get done in, call it 4 months easily, if we were to just kind of put our minds to it. So it's something that can be done very quickly. And again, the big advantage over the Morrison deposit is just the ramp we have going down the Morrison deposit. It could parallel this system if it's a system, and we could come off horizontally on a number of levels and then utilize that ramp to move material up to our loading pocket. So we're in a pretty good shape, and I think we can move on it pretty quickly once we have a resource and we make that decision if that happens.
Perfect. So let's quickly touch base on the 510 level footwall. Have you started drill up dip to see if it extends to surface?
No, we haven't started yet, but this month there's a drill, a third drill coming in. We don't want to distract our drills right now that are helping us, drill off what we're going to be mining in 2026. So we bring in a third drill just for this area and focus on that. So we'll start seeing results from that hopefully towards the end of the month, and then we might get news out on that towards the end of October.
And also, could you give us an update on Crean Hill and Shakespeare?
Yeah, so Crean Hill has been taking a back seat. We've been very, very busy with Levack and McCreedy, and it's the right thing to do is to focus on those at this time. But we have been doing some engineering work. We did receive some funding from the Critical Mineral Infrastructure Fund. That's been very helpful in getting the engineering work done and the studies done to bring in grid power. So that's been advancing. And we've also been advancing some of the design and engineering for the permanent dewatering system, which is, it's good to have extra time to do that, to find the most optimal way to do it and find any cost savings we can. And so that's been going pretty well, and we hope to have all that completed by the end of the year. So if next year there is any sort of government support to move that project forward quicker, we'd be in a position to move on it.
Perfect. And then to my final and ultimate question, where do you envision Magna Mining towards the end of next year?
Oh, wow. If you would have asked me that a month ago, I'd have a completely different answer. This R2 zone has changed a lot in the way we're looking at our company. I think it could be a real game changer for what we want to do. Again, drilling will tell over the next months, but by next year, by the end of next year, we could be sitting on top of a very significant footwall deposit with potentially very high margin, ore. And, our restart plan for Levack could be very much a ramp from surface with upper mining levels that are supported by a ramp and essentially independent of the shaft, as well as putting together a plan to go after a very high grade copper footwall deposit at depth, utilizing the shaft and the existing ramps at depth. Again, I can't help but let my mind wander into, what would that look like from a tonnage and a metal pound capacity. And, knowing what the Morrison deposit did, and anyone that wants to do their research can look up the old reports and financial results from FNX mining in 2009, 2010, and even Quadra FNX in 2011. And you can see the kind of production profile that these footwall deposits like the Morrison can create, the amount of metal pounds. And it's exciting. So I think we'll be in a stronger position year over year. I think we'll have some significant cash flows coming in, and I think our growth profile could be even greater than it is right now. So still lots on the go, lots of growth. We're focused and we're taking things one step at a time. And since we've been talking, obviously it's been a few years now. I think that we've grown year over year over year, and we're going to keep looking at those opportunities, what makes the most sense, and taking advantage of those opportunities when we see them.